Are you tired of watching the stock market yo-yo and your income just disappear? Well, let's talk about real estate backed funds that actually pay you, backed by real assets. So in this video, I'm going to cover the best types of real estate funds for predictable income, what to look for in an operator, how accredited investors are earning steady returns without flipping houses, and certainly without managing tenants. So first, what in the world are real estate backed funds? Well, they're funds that are brought together, typically in a pool. They're utilized to lend that money out to real estate operators. They generate interest income for those investors. At the end of the day, they've got collateral. It's backed by real property. So you've got a safety net built in there. There's three types of money funds. Private lending funds. Private lending funds. Those are generally short-term loans, high yield, backed by real estate, of course, typically done by fix and flippers. Then you've got income debt funds. Think of larger commercial projects, longer-term steady borrowers and bigger pieces of collateral. Then you've got hybrid funds, really a combination of that, of the mixed income, along with an equity participation. Accredited investors love these funds, and they love them for a number of reasons. One is, of course, predictable cash flow. Interest income, money comes in each and every month as the borrowers are paying interest. It's backed by hard assets, and it's boring, but boring in a good way. It's not particularly exciting, not a big run-ups, not big rundowns, just steady Eddie, boring, money coming in each and every month like clockwork. If you are going to invest in a fund, in a co-lending fund, like what we're talking about, it's important for you that the operator. Who are they? What are they doing? How do they operate that fund? So you're going to want to ask lots of questions. Some of those important questions are, what's the loan to value inside that fund? How do they underwrite in the fund? What's their default rate in the fund? And the liquidity terms. When can you and how can you get your money back? Should you choose to get your money back? Look for transparency. They open and honest, sharing a whole bunch of information about how they operate that fund. And you want to make sure you're with an operator who's got skin in the game. You don't want them making mistakes on your dollars. You want to make sure that they're invested alongside you in a large way. That, and lastly, you want to understand the geographic advantage or disadvantage of the properties. I think of a disadvantage being if you're betting on or lending to fix and flippers in some of the coastal markets where they're heavy appreciation. That's fine, but you want to understand what's the underwriting criteria like, because in time periods where there is not house appreciation, where it's very, very steady, in fact, in some markets declining, you want to understand how those loans are underwritten, or you want to understand the economic and the location advantage that exists in other places. Midwest, for example, a heavy cash flow market. There's always, historically, always an alternative to fixing and flipping that home. It could turn into a rental property. You want to understand that there's conservative valuations and how they vet those borrowers. So understand that geographically. You want to understand if they've got borrowers that are based there, that are located there, they ultimately end up with a geographic local advantage in any given marketplace. So real estate backed income funds, well, they aren't sexy, but they work. You get predictable returns, real collateral, zero tenant drama. If you want to learn more, I dropped a link in the description below with another video. It goes into a lot more detail.